Trading in the financial markets can be a great way to potentially earn returns on your investments, but it can also be risky. There are various types of financial markets to trade in, including the foreign exchange, Forex, market, and the stock market. The Forex market is the largest and most liquid market in the world, with a daily trading volume of over $5 trillion. In the Forex market, traders buy and sell currencies in order to make a profit. The value of a currency can be affected by a variety of factors, including economic indicators, political events, and even natural disasters. The stock market, on the other hand, is where publicly traded companies' stocks are bought and sold. When you buy a stock, you are essentially buying a small piece of ownership in the company. The value of a stock can be affected by the company's financial performance, as well as broader market conditions. Both Forex and stock trading can be highly speculative, which means that you can make large profits, but also large losses. It's essential to have a good understanding of the market and the underlying assets before trading. Traders also need to develop a sound risk management strategy to help manage their potential losses. Traders have many tools and resources available to help them with their research and analysis, such as technical indicators, charting tools, and financial news websites. Additionally, many online brokerages offer educational resources and trading platforms that can help traders learn the basics of trading and develop their skills. In summary, trading in the financial markets can be a great way to potentially earn returns on your investments, but it also carries risk. Whether you are interested in trading Forex or stocks, it is important to have a solid understanding of the markets and the underlying assets, as well as a sound risk management strategy. With the right knowledge and resources, anyone can learn how to trade and potentially earn returns on their investments.